The chief economist for Moody's Analytics is now reporting a massive housing market and economic warning here in 2025 that you all need to be paying attention to. This chief economist says that the housing market is showing red flares and that there's a big warning that a slowdown in the housing market over the next year is going to cause home prices to drop, home sales to drop, and could pose risks for the U.S. economy as more and more people in the mainstream now are getting on the bandwagon of there being a housing market downturn in the US. And why this is important for you guys to pay attention to is that as more and more of the mainstream economists, mainstream financial firms admit there's a housing market downturn, I believe that's something that could further perpetuate the decline in prices as it just becomes baked into the consciousness of Americans, of homeowners. And when I talk to locals in all of these markets, it's amazing how almost everyone I talk to now knows that the housing market is going down. They now know that prices are dropping and that things are going to get cheaper into the future. 6 months ago, this wasn't the case. 6 months ago, when I talked to people in the housing market, a lot of them still thought it was a good idea to buy a house, that prices would still go up, but something has clearly shifted in the last 6 months. More and more Americans understand what's about to happen in the U.S. housing market and that things are about to get cheaper, which is ultimately going to be good news for home buyers, but might be bad news for some of the people who bought at the peak of the bubble. Because here in Atlanta, where I'm standing right now, values are down 2.4% over the last year across the metro. And this was a market that a lot of the investors swooped into during the pandemic. A lot of people moved to Atlanta during the pandemic, and that caused the prices to surge. They went up 60-70%, but now they're starting to correct. Now they're starting to get cheaper. And the Wall Street Journal actually just ran an article on Atlanta's economy and demographics, saying that there's a slowdown in people now moving into Atlanta because this is an area that just got too expensive for a lot of the locals. And as this video goes on, I'm going to talk more about the specifics of Atlanta's housing market. But first, I want to talk about more of these mainstream news organizations, financial entities that are getting on board with the housing market downturn. You know, MarketWatch just ran this article on Moody's Analytics chief economist Mark Zandi issuing all these warnings on the economy. We also have Goldman Sachs coming out and getting bearish on the housing market. Goldman Sachs is saying home prices are only going to go up 0.5% the next 12 months. That's their worst forecast in 14 years. And Goldman Sachs now thinks prices are going to drop in a lot of cities. They think over 15% of US housing markets are going to drop more than 5%. And, you know, Goldman Sachs, of course, the big investment bank on Wall Street, very well respected, they're now bearish on the housing market. What are the markets Goldman thinks are going to go down the most? Miami, Dallas, Nashville, and Orlando. But one thing I want to be really clear with you guys about is that this housing market downturn is not evenly distributed across the US. There's lots of people on YouTube and Instagram right now who are like jumping on the housing crash bandwagon, telling you the prices are going to drop 50% everywhere. That's not going to happen. Rather, we're seeing a bifurcated downturn where the most overvalued markets with the most inventory are going down the most. That's a trend that's extremely consistent across the US. Conversely, if you go to some areas that are nice with high incomes, like where I am right now, I'm on the border of Brookhaven and Buckhead in Atlanta. This market has yet to see a home price correction. Now, what I want you guys to do right now, if you're watching on TV, which about over half of you watch me on your television, is take out your phone and search on the Reventure mobile app the zip code 30319. 30319. That's where I am right now. And at the end of this video, download the Reventure mobile app if you haven't already. But I'm in 30319. And why I want to point you guys to this zip code so you can understand how bifurcated the market is. So Atlanta's correcting, there's a huge surge in inventory, but this zip code, prices are still flat year over year, and our Reventure forecast is actually plus 1.1% over the next 12 months here in Buckhead/Brookhaven, the area north of Atlanta, Buckhead-Brookhaven border. We still think prices are going to go up the next 12 months because this is a wealthier area where there's still an inventory shortage. If you go to for sale inventory, there's only 211 homes on the market compared to 340 before the pandemic. So you could see that inventory shortage still. That inventory shortage is still putting some upward lift on prices, preventing them from going down. And this is a key point to understand, everyone, that the housing market is very bifurcated. As we see more and more of these mainstream financial outlets like Moody's, as well as financial firms like Goldman Sachs, acknowledge the housing market downturn, it's going to be more important than ever for you to actually understand what's going on in your city and zip code, and that even in a market like Atlanta, which is down minus 2.6% year over year across the metro, well, that's just an average across the metro. Some zip codes, like where I am right now, are still going up, while other zip codes are crashing. So again, if you open the Reventure mobile app and look at the home value growth across Atlanta, you can see values are down double digits in some of these zip codes to the south in blue. It's a sea of blue. Prices are dropping everywhere south of Atlanta. There's a legitimate housing crash going on in some of these zip codes south of Atlanta, but north of Atlanta, they're holding on better. And you can see right now, I'm actually in a townhome community. They have some new townhomes they're building here. I just looked on Zillow. These townhomes are going for $870,000, which is pretty expensive. This is a wealthier part of town. So the median income here north of Atlanta in Buckhead, Brookhaven is around $130,000, $140,000. And it's those higher income levels that are supporting the market more and preventing values from falling, while it's the lower incomes south of Atlanta, where the median income is around $40,000, $45,000, that's causing the value there to correct. And what we do at Reventure App, everyone, is that we have a 12-month forecast for almost every zip code in America. Because one thing I want to make sure is that you guys as home buyers understand where the market is trending in your area, and that you don't just rely on mainstream news articles, or you just don't rely on hearing a YouTube video or what someone's saying on social media to influence your decision, that you actually have power to look at the data. And looking at the data now more than ever is really, really important. And at the end of this video, I'm going to explain to you all how you can access this data for your area so you can know where prices are heading and where ultimately you can save money on your home purchase by using this data. But of course, some people in the housing market are saying that this downturn won't happen because they're going to say that the Fed's going to cut interest rates, right? This is something that's getting a lot of press lately, is that, Fed interest rate cuts are on the way. The betting markets are saying 3 rate cuts by the end of the year, and who knows, maybe we could even have a new Fed chair before the end of 2025 if Donald Trump finds a way to fire Jerome Powell. And if we have a new Fed chair, then who knows what could happen in terms of interest rates. So there is some potential volatility and uncertainty involving interest rates over the next 6 months to 12 months that could impact where the market is going. And I hear a lot of realtors out there and builders and mortgage brokers talk about how interest rates going down is going to re-stimulate the market. And even Mark Zandi, the Moody's Analytics economist, is saying in the Market Watch article that, it's going to go down unless mortgage rates drop from 7%. Basically saying, interest rate declines could bring buyers back into the market. And look, folks, I think it's reasonable to say that some buyers might come back in if rates drop. However, home prices going down is the only real way to re-stimulate demand. Because if we look at the 130-year graph of inflation-adjusted home prices in America, what do you notice, everyone? Oh, wow. You notice we're in a massive bubble today. Home prices have gone up way faster than the costs of other goods and services in the economy. Home prices have gone up way faster than income and rent. And so I think the one thing that these housing analysts still miss in their analysis, even though they're finally getting on board with the idea of a housing market downturn, they still miss the central idea that this isn't about interest rates. This is about prices. Prices are too high. We have never seen prices this high before in real terms. Rate cuts on their own are not going to bring the buyers back in. Rather, prices need to drop. And you guys, of course, can let me know what you think about this topic and debate in the comments section. Do you think it's more about prices, or do you think it's more about mortgage rates? Now, one additional data point that I think is really important for you guys to look at is that overvaluation rate, right? Because, it's one thing to know how much prices are going to go up or down the next 12 months, right? But it's also something to know is just how fundamentally over or undervalued prices are. And again, if we look at where I'm standing right now in 30319, home prices are only 10% overvalued according to data on Reventure App, meaning that the growth in incomes has largely kept up with the growth in prices here north of Atlanta. Now, that doesn't mean that prices aren't expensive. They are expensive. The houses here in this neighborhood are really, really nice, and a lot of them can go for $1 million, which is expensive. But the overall point is the incomes have kept pace largely with the growth in home prices here, so they're only 10% overvalued. So if prices are only 10% overvalued and they're forecast to go up 1% over the next year, you're not going to gain a whole lot by holding out and waiting for the market to crash in this area. However, if you go to other parts of Atlanta where prices are 40 or 50% overvalued and where we think values are going to drop 8 to 10% in a year, well, yeah, you're going to gain a lot by waiting. Prices are going to get significantly more affordable, and if you do buy in those heavily overvalued markets with the big 12-month forecast, you better get a good deal up front. You better negotiate hard with that seller. You better get that house below asking price in anticipation that the values are going to fall further after you buy. But one interesting question I think is that we should ask is, what could home value declines do to the U.S. economy, right? This is something that I think maybe a lot of people aren't wanting to answer this question or ask this question is there some economic risk here from home values declining? Like, is there a downside to home prices dropping? Because I think the upside to home prices dropping is obvious. Home prices dropping is good for home buyers because it makes the market more affordable. More people will be able to afford it. There'll be more transactions. We'll have more first-time home buyers if prices drop. That's the upside. But is there a downside to home prices dropping in the form of some type of economic contraction? Like if homeowners in another neighborhood of Atlanta that's more exposed to a downside lose equity, could we then see them cut back spending, and would there be an associated economic recession? I think that's one thing the Trump administration is probably very cognizant of, and it's why I think they're starting to realize they want to get in front of this housing market downturn. They want to cut interest rates because they know maybe there's some economic risk factors. Additionally, the home builders could pull back on construction starts. They already might be pulling back on construction starts from the most recent report from the U.S. Census Bureau. Mark Zandi, the economist, also said that one of the signs of a slowdown is the builders are delaying land purchases. They're not buying the land. They have options on the land, but they're not, taking ownership of the land as quickly because they see maybe in the future they don't want to build on the land because the margins aren't there to do it. So maybe we see some layoffs in the construction industry if this continues. And those are definite risks, everyone, for the economy. I mean, I think it'd be foolish to say that there'd be no economic risk to a housing market correction across the U.S. However, I think the gains outweigh the risks. And I think homeowners today have so much equity in their homes that they can absorb a correction, and that correction won't cause a massive calamity in the economy like it did in 2008. And that's a good thing, everyone, is that homeowners can actually absorb this housing market downturn in a way that they couldn't in the mid-2000s, which is why I think our policymakers should be more okay with just letting this happen. While this shares a lot of similarities to 2008, and certain things are worse than 2008, I don't think there's the same systemic risk to the whole financial and economic system that there was back in 2008 from a housing market correction. And with that, what about my forecasts for where prices are heading in the next 12 months? Where are we at Reventure App saying that prices are going to go? Well, our forecast, everyone, is an objective, data-driven forecast that's proven very accurate over the last couple of years. It's actually the most accurate forecast on the housing market down to the county and metro and zip code level that you can find that's widely available. We achieved a 73% correlation coefficient from 2023 to 2024 in predicting prices. We're doing it again 2024 to 2025. Our model is working really, really well. And the reason our model works well is because our forecast is based on the underlying supply and demand fundamentals in each market. We look at the data on inventory. We look at the data on price cuts. We look at the data on days on market, and those data points signal where the market is trending in the future. And you can see right now our biggest downward forecast by state is Florida. We have Florida going down around 6.5, 6.6%. Now I know some of you in the comment section say, Nick, that forecast seems conservative or low, like Florida's going to go down way more than that. I would say there's a definite possibility it goes down more than that, but just based on what the data is saying and Florida's housing market history, statewide, I think a 6.5% forward 12-month forecast is reasonable. Now, certain markets in Florida, we have a much bigger downward forecast. In certain zip codes, we also have a much bigger downward forecast. So in parts of Tampa and St. Pete, we think prices could drop over 10% the next year, which is a huge drop for 1 year. Another market where we think prices are going to drop heavy is Colorado. Colorado now, we have over a 6% 12-month forecast declined. Colorado is getting smacked with inventory right now. There's tons of homes for sale all across the state of Colorado, particularly in Denver and Colorado Springs. So we now have a minus 6% forecast in Colorado. We also have some heavy downward forecasts in Arizona and Utah and Texas, and even Georgia is now getting in on the action. Now, interestingly, the article that talked about Atlanta's migration exodus from the Wall Street Journal, it talked actually about the fact that people leaving Atlanta are also going to other Sun Belt housing markets that are more affordable. In particular, this article mentioned Huntsville, Alabama, Wilmington, North Carolina, Chattanooga, Tennessee, and Knoxville, Tennessee as markets that people are migrating to from an area like Atlanta because they're more affordable. And in particular, this article quoted a couple who ended up buying a house in Chattanooga for like $325,000. It was brand new from the builder, with the idea being that they would have never been able to find a house so cheap in Atlanta. Now, I don't actually know if I agree with that. I've been in around Atlanta the last week, and there are actually plenty of cheaper options to live in the Atlanta metro. My previous video, I was showing you guys about an hour south of Atlanta or 45 minutes south of Atlanta, you could buy brand new houses for around 300 grand. Investors are selling houses for 250 grand. So Atlanta's pretty cheap if you really look for it. However, like Chattanooga is getting kind of expensive compared to what it used to be. Knoxville is getting kind of expensive compared to what it used to be. In fact, Knoxville, everyone, is the most overvalued housing market in America on Reventure App. We have Knoxville pegged at around 37-38% overvalued in 2025. The prices in Knoxville just went crazy during the pandemic. The incomes didn't keep up. The real question is, how much are prices going to go down in your zip code? Is now a good time to buy in your area? And if you're a serious home buyer or investor in 2025, those are questions you need to answer. So what I would encourage you guys to do right now is download the Reventure mobile app on the Apple and Android app stores and upgrade to a premium plan so you can see our 12-month price forecast for your zip code as well as the overvaluation rate for your zip code. Those two data points are essential for you as a buyer or investor in 2025 to understand whether it's a good time to buy in your market and what you should offer if you do buy, so you can make a better decision in 2025. So download that mobile app right now, sign up for a premium plan, and oh, by the way, by downloading the mobile app, you'll be able to follow along in my future videos here on this road trip. I got several more stops coming, and I want to make sure you guys can track the data along with me. So download that Reventure mobile app in the Apple and Android app stores today and upgrade to premium.